Well, we had a little bit of a hiccup there this morning in the soybean markets. It went a little bit lower, but then they got some strength back in the marketplace. And right now, Aaron Thiele joining us on the daily market recap. And Aaron, with agmarket.net. Aaron, what did we see come out of that trade today? What was kind of the momentum here?
Yeah, we had a really good day yesterday around some purchases of Chinese buying 5 cargoes of soybeans, and it looks like that maybe there was some more continued interest coming out of that midday today as we see continued strength and higher prices in the trade as corn is closing or is up 4 to 5 cents right now, and then soybeans are up anywhere from 4 to 18 cents in the July. But yeah, just a continued strength, continued leg higher. It's really good to see after we spent so much time just falling out of bed in the month of June. But yeah, the continued interest from China and export business as well as different GFS models showing some dry and hot conditions coming into the forecast the next 10 to 14 days.
Yeah, I was just going to ask about how weather premium was playing into that. I mean, we had a lot of rain through the power part of the corn belt, and obviously, a little bit of rain to get you through into tasseling, and then the grain fill. That's what you want to see. I think Iowa's got more than its share right now, but some areas also got rain that needed it badly, and at least weakened some of the drought statuses a little bit. But again, that hot and dry temperature. I mean, how much is this really weighing on the market, and how much is this influencing the trade?
Yeah, I think it's definitely having an impact on the market right now just because the weather and where we're at right now with July is the core, very important growing part of the season for the corn crop. Soybeans a little bit later, but still important nonetheless. And so I think that right now with the weather and if there's going to be some dry conditions, then yeah, the market's going to pay attention to that. And when you throw in that along with China interest, that it's kind of what you see is some higher price action and some buying into the market as well.
And then switching gears to the livestock side of things, last couple of days, cattle has had a little bit of pressure. Nothing really crazy, but a normal a couple of years ago, we would have been like, okay, cattle's had a few straight days down, maybe something to worry about. But now we've been so high, it's like we're not even blinking or worrying about it yet. But how did they finish out today with cattle?
Yeah, the cattle market it finished lower anywhere from $1.60, and then actually the August feeder cattle was up 15 cents, and then live cattle were down anywhere from 22 cents to 67 cents. So lower on the cattle side. I think that you can. I think I have seen that the cash market has continued to stay strong, both on the feeder side as well as some on the fat side. Maybe not as high and as at the premium that we have seen previously, but they're still very good prices and still helping support that market when when the front month contract is August and that feeder cattle index isn't going to settle until the end of August. I think that's where you can see some spread and some differences between the cash and the futures market. On the hogs, July hogs were up 10 cents, but other than that, the hogs continue to just be a dog and not want to catch any buying or close higher.
All right. Well, if folks want to look at some of the intel you guys have or talked about some possible options with marketing what they got for their 26 crop and the new crop marketing, what's the best way for them to get these conversations started?
They can find us online at agmarket.net or they can call us here in the Wisconsin office at 608-384-5438.
All right. Aaron Thiele's been with us from agmarket.net. Aaron, thanks so much for the insight. We'll talk to you again soon.
You bet. Thank you.